No PBOC balance sheet update since December. Well, no problem. 3 months, not Shibor, Shanghai Interbank Offer Rates are snitching on the Beijing in real time. So look at this. 3 month Shibor, which tends to drop like a rock as a leading indicator for big inflections in the Chinese credit impulse, which itself is a leading indicator on a 1 to 3 quarter basis for the Chinese growth impulse, is going nowhere. I'll say that again. 3 month Shibor is going nowhere. It's actually going up, which is telling you that, hey, look, as much liquidity as the Beijing supplied to the market, as we were revising the G's three arrows policy, et cetera, in Q4, well, it seems to have stopped. And it certainly doesn't seem to be doing as much of a job of easing the financial conditions in the Chinese economy of late. And why is that? Well, without steady inflows from China Inc., which is China's export machine, the PBOC cannot supply sufficient liquidity without weakening the renminbi. And so this chart here shows China's foreign exchange reserves, China's central bank balance sheet. As you can see, those things are highly correlated. Well, why the hell are they highly correlated? China has a closed capital account. So those foreign exchange reserves get converted into renminbi when they enter the economy, and those dollars sit on the PBOC's bank balance sheet. That's roughly, not quite, but roughly half of the balance sheet. In fact, it was more than half of the balance sheet back in this kind of early, in kind of mid 20 teens period. And so ever since the dollar, kind of really started to break out in 2014, go back to that big drawdown we saw in energy prices, et cetera, really caused a significant narrowing of our current account deficit and really, caused the dollar to really strengthen. And we've been in a kind of I wouldn't say raging dollar bull market ever since then, but that dollar strength, that persistent dollar strength from that point really caused a lot of significant weakness, significant capital inflows in the U.S. economy. We doubled our net international investment position, our net international investment deficit, which means we doubled the amount of claims, that doubled the amount of assets that foreign investors had in terms of claiming U.S. assets. But that's neither here nor there. What I'm trying to say is, you notice how ever since the renminbi peaked, and kind of the foreign, more importantly, I think it starts with the foreign exchange reserves peak, because they peak because we're now seeing capital outflows. The reason China has capital outflows, because again they have a closed capital count, is because of overseas retained earnings. When China's company A or company B sell something overseas and they don't bring that money home, those are counted as foreign or capital outflows technically. And it's basically not allowing the PBOC's balance sheet to grow as fast as it used to be, because again those earnings are being trapped overseas, and you're seeing that represented in the foreign exchange reserve statistic. But going back to the PBOC's balance sheet, you've seen that every time we tried to pump the PBOC's balance sheet since the renminbi peak, since the dollar really broke out and started to change the whole global edifice of the currency market, we see a significant decline in the renminbi. PBOC breaks out, significant decline in the renminbi. And so what it's effectively saying is, as long as China wants to maintain this policy of relative currency stability, they're basically trying to become the US of Asia. They can't really materially expand their balance sheet, the PBOC, without significantly weakening the renminbi. Well, again, it's they have to choose. It's the economic dilemma. Do you want to have control over your interest rates? Do you want to control over your capital flows, or do you want to control over the monetary base? They're in a difficult situation as long as the dollar continues to break out. So hopefully that made sense. Certainly holler at me on our private Twitter if I can explain that in a better way. But anyway, so that's part of the reason why we feel comfortable selling China here. I'd love to have a few more weeks to give it, just to see if Beijing is going to fall through. But again, as long as the tabby cat now lives in the tree, the probability based on these dynamics of China actually following through with material stimulus declines. And as long as that's declining, that's telling you that there's a market that is up on a rope over the last 3 to 4 months, could easily give back 10, 20, 30% from here.